The unemployment rate is down, we know that. The economy chugging along, and the stock market is near all-time highs. But I sat down with former Federal Reserve Chairman Bernanke, and he told me there are some short-term and long-term trends that have led to some dissatisfaction in many parts of the country. He gave President Donald Trump credit for identifying those trends and connecting with disenfranchised Americans.
Well, there's a paradox. I mean, in terms of the recovery from the Great Recession, the U.S. economy is really doing quite well. Unemployment rate, 4.4%. Stock market is up, as you mentioned. Job creation, confidence, all those things are very positive. But I have to give candidate Trump credit that he did identify some real dissatisfaction in the country, and it relates to some very long-term trends. A lot of inequality, slow wage growth, lots of things, particularly in the middle part of the country and among people with less education that have held them back and made them pretty dissatisfied.
Yeah, you're absolutely right. Let me ask you about the Federal Reserve's balance sheet, Dr. Bernanke. Of course, we're expecting a bit of an unwinding there. How impactful will that be? How are they going to do that, unwind a balance sheet that, what are we up to, $5 trillion?
No, it's $4.5 trillion, which, of course, is a huge amount of money, but it's about a quarter of U.S. GDP, similar to other large central banks. What they're going to do is they want to unwind it, reduce it probably to $3 trillion or so, and they're going to begin that process later this year or early next year. And the way they're going to do it, at least they've told us, is that they're simply going to stop reinvesting, so that when securities mature, instead of taking that money and buying a new security and replacing it, they're just going to let it run off. And that process will allow the Fed's balance sheet to very slowly, passively decline over about a 3 to 4 year period and get back to something that's going to be more sustainable over time.
So you think if they do this over a 3 to 4 year period, it won't have as much of an impact than some people are worried about? I mean, what kind of an impact does unwinding $4.5 trillion balance sheet have on markets and on the economy?
Well, I think it's going to be modest. It's going to be slow and predictable. It's fully anticipated by the markets at this point. So what it'll probably do is add a little bit of upward pressure to longer-term interest rates. But the Fed can react to that by postponing, for example, an increase in the federal funds rate, or otherwise trying to adjust for it. So I think it's not going to cause a lot of problems. Most people in America won't even be aware of it. And it'll be, I think, the end of a pretty successful episode where the Fed used its balance sheet to help get us back to full employment. And now that we're there, they're going to gradually, cautiously allow it to unwind. So it'll be, I think, not a big deal for markets or for the economy.
Well, of course, you came up with incredibly innovative ways to get us back on track when this country was in the throes of recession, the worst that we have seen in a generation. You say that right now things are looking a lot better, and that we are certainly seeing a good situation with unemployment where it is. But one of the economists that I speak with a lot looks at tax receipts and income. And she said, look, when you look at the tax receipts, you can see that Americans aren't making enough money to actually put back into the economy in terms of consumer spending. Do you worry about that?
Well, I pay attention to that, too. I think that if you look at the job creation and the fact that wages are not going gangbusters, but they're growing more quickly now, between more jobs and higher wages, we are seeing more income. And it's reflected in when you ask consumers, in the consumer confidence surveys, how do they feel about their own financial situations, they're more upbeat about that than they've been in quite a few years. So I do think that the engine of the recovery will continue to be consumers and households, and income has been strong enough that's going to support their spending.
Wow, what a week we've had this past week, Dr. Bernanke. Are you surprised that now the markets are starting to say to themselves, look, maybe we won't get that big tax cut that we were expecting, maybe we won't get the policy that we were expecting? Is this the beginning of something bigger?
Well, again, I think the markets kind of overdid it early on, and they've kind of come back down to earth as they recognize that the policy changes are going to be slower, smaller, later than they originally thought. On the other hand, the U.S. economy, again, is doing pretty well, and the global economy is doing better than it has for a while. The European economy, for example, has picked up. Japan had some good numbers this week. So it's more of a global recovery going on right now as well as in the United States. So, good markets are justified, but again, as you say, from a policy perspective, U.S. policy, it's not going to be as big or as effective as some of the markets originally anticipated.
Yeah, you make a really good point about the international economy right now. A lot of conversation happening about Europe and Japan. Do you worry that we haven't really seen much change in the emerging markets so far? They have been underwater now for years.
Well, the emerging markets depend a lot on what's happening in the advanced economies, and and also in China. So long as China is growing okay, which it has recently, and the U.S. is doing okay, oil prices, commodity prices are kind of middling right now. All those things are good enough that emerging markets, I think, are doing better, and their markets are doing better. So they are, again, very dependent, particularly on China, but also on the U.S. For their growth, and that generally has been better. Yeah. They've also made some good adjustment. They had a lot of trouble a few years ago, but they have made some pretty good adjustments with their policies as well.